In this video, we will talk about Palantir, trading under the symbol PLTR. The stock has definitely been one of the most promising and talked about in recent weeks and months. And given that we're in 2021, that's really saying something. Please watch this video until the end, because we will cover why the company attracts so much attention, so much hype, if the hype is justified, and if you should buy the stock. Palantir is a big data company that specializes in analyzing the data and transforming it to useful information for the clients. Its name, by the way, is taken from the stone that sees everything in the novels and movies of Lord of the Rings. And it has been one of the more significant startups going public in recent history. If we're going to be honest with ourselves, I think that the business fundamentals, in other words, the financial statements, at this point in time, are not enough to justify why the stock is trading at such a high valuation. I mean, yeah, its revenue and net income have been growing and will keep growing in the years to come, and eventually becoming profitable. But in my mind, there are two fundamental reasons why Palantir attracts so many people's attention and keep doing so. The first one is the importance of big data most of us think that it's going to take in our lives. Palantir wouldn't be the first and only company benefiting from this, because pretty much the entire Silicon Valley at this point has worked for at least a decade to collect those data from the consumer market and feed itself. So Palantir's value proposition really is that it specializes in processing those huge amounts of data so that random bits of numbers on giant spreadsheets can become useful information that we can use to create additional value. The second one is the position it has in the American government agencies, and more specifically, the key places of power, or shall I say, where the spending goes. This one is slightly conspirational, but essentially the idea is, if Alex Karp goes to Davos so often, then it's possible that the rich and powerful on this planet will view the company as an important keystone to their business model. And that kind of relationship can greatly benefit Palantir. Now, I'm not saying whether this is true or not. All I'm saying is that is the gist. That is the gist why people think that Palantir has this kind of clout or influence that will help them grow larger. From this perspective, it's easy to understand why Palantir has so many job openings in Washington, D.C. of all places, especially in sales, marketing, and public relations. Of course, if Palantir wants to increase its revenue exponentially and eventually justify their valuation, many will say that, look, it's not going to be enough to just rely on government contracts. Or is it? Because as we know, Palantir already has contracts and relationship with the Pentagon and the DoD. The need for data analytics in those agencies can be huge. And Palantir, as a third-party contractor, has the benefit of flexibility and specialized expertise that those gigantic governmental agencies probably don't have. Now, what they don't want to say, and what I'm going to say here, is that people's assumption is basically that given how huge the US military spending is on a yearly basis, it's going to be chump change for them, but a huge chunk of profit for Palantir, if that kind of relationship becomes more fruitful in the years to come. There are two recent events that should, in my opinion, trigger our interest. Palantir's stock recently tanked, just like the rest of the stock market, by the way, and the first thing that ARK did was to massively increase their stake in the company. Keep in mind that at the time, there was nothing particularly new or positive or negative about a company, so the stock was just following the flow of sell-offs. Now, this is a very important piece of information, in my opinion, because what this means is that the current name of the game is timing. In other words, Cathie Wood, just like a lot of institutional buyers, consider that Palantir is still relatively cheap for what it can achieve or what it can mean in the future. And we're talking about the near future that's going to happen within a decade. Alright, so now you get the idea why I am personally long on Palantir. Let's look at the price action and see if the timing is right to buy the company. When we look at the chart, I would say that the most important information is twofold. One, the company is still in a massive bullish trend. And two, the most important support level to watch happens to be where the price is at this very moment, at $24. This level has been tested twice already, once in January 2021 and another time in earlier March. If you're wondering if Palantir still has enough steam to go up 50 to 100% over the next few weeks, my feeling is probably no. Like, at some point, you really have to let the stock take a deep breath after an extremely strong entry in the stock market. With all that being said, my feeling is it's a matter of time before the stock takes off again. And in the meantime, it's really important to make sure that you have what it takes to wait till this day. And by that, I mean time and entry point. So think about it. Let's say on one hand, you have 2% of your portfolio in Palantir, and on the other, you have like 60. For a stock like Palantir, you have to give it time to grow. It's a bit like Tesla. Some of you watching still remember that Tesla used to have a few pretty rough years. Like, not the kind of, whoa, they just missed a delivery number kind of bad, but is this the end of Elon Musk kind of bad? Well, I think that as time goes on, Palantir will have one or some of those hurdles on its ways. What if there are a few missing profitability targets here and there, and the stock tanks by like 10%? What if Alex Karp, their CEO and that crazy dude with funny hair, decided to roll a fat one at Joe Rogan's show? See, the reason I bring those up is because those events can happen. They're not in our control. So what we should and must do is to structure our position so that you can give time to this company without pulling your hair out. So let's go back to the scenarios of 2 and 60%. If you have 2%, which is by the way my case, you have the luxury of not caring about those difficulties because you literally can. Another example is that in my portfolio, CCIV counts for about 1% of my entire holdings. Even if it dipped by more than 30%, or I want to say 50% from its high point, I still have the luxury of giving it time to grow back. And personally, I do believe that CCIV will grow back as well. Just a small tangent. Let's imagine the scenario where you have 60% of your clams in Palantir, and you bought the shares at like when the stock was in the 40s. And then Alex Karp rolls a fat one with Rogan, and the stock tanks for like another 20%. With Jim Cramer goes nuts on CNBC, Wall Street Journal wondering when the guy is gonna bounce. Are you really going to just let the stock take its time? I mean, maybe if you're a very zen person, but in my mind, probably not. If you're anywhere near being a normal human, especially if your portfolio is a very significant part of everything that you own. My point in all this is to have a diversified portfolio and never, ever, ever invest in a company without thinking about the risk, no matter how much potential you think there is, and no matter how much YouTube thumbnails tells you that this company has a huge potential and that it's gonna 100x with plenty of rockets going about. It's super important that you consider the risk diversification of your portfolio, because I can guarantee you that the risk always think about your portfolio and wonders what it can do to eat your money away. Alright, so do I think about buying Palantir is a good idea? If you agree with the idea that big data is going to be very important and Palantir is a leader in analyzing it, then yes, big time. How much do I think you should put in? Personally, I have about 2% of my portfolio in it, and I think that's enough for now. I may increase my exposure once my portfolio grows in size. Of course, the maximum I would say is like 5% of your portfolio, but more than that, we would become too emotional for our own good, and more importantly, too emotional for the good of the position. The final question, what is a good time to buy in? I think that now would be a good time to consider, especially since the price is right on the support line. Of course, the real answer is always going to be as low as you can snipe it for. So don't buy all your shares at once. Thank you for watching. If you like my content, please like, comment, subscribe, and check out my channel for more analysis videos.